What's up, millennials? Today I'm going to give you the exact fair price for a charging station company called Volta. And Volta is going to be acquired by a SPAC that is currently trading under the ticker symbol SNPR. Now, before we start, as always, I have not done extensive research about this company. We're just going to take a look at the valuation according to the SPAC and the company Volta itself. Also, don't trust me, verify me, I'm just documenting my journey here. I'm not a financial expert. And lastly, if you would like to talk a little bit more about SPACs or other things, don't forget to subscribe to the Discord. It's free to join. If you go to nesami.com/discord, you leave your name, you leave your email address, you're going to get access to it. So let's first start with a brief introduction of this company Volta. So as I've said before, it is a charging station company, just like ChargePoint, EVBox, and EVgo, of course. They make these beautiful new charging stations. No, just kidding, of course. If we scroll down a little bit, we can see that these are the beautiful charging stations that they produce. And if we go down a little bit further to the page number 23, let's see if we can find it. Over here, we can see that they currently have about 1,500 charging stations, about 1,100 under contract, and about 10,000 charging stations in the pipeline as well. Now, one thing I do like a lot about this company is the fact that they combine their charging stations with these screens that can be manufactured within that charging station, and these screens can actually display things like marketing, programmatic media, stuff like that. So I actually thought that that was a very smart move by Volta. I actually hope that ChargePoint and EVgo are going to do a very similar thing, because I do think that can bring in some extra revenue for sure for this company. So there is no merger date just yet, but they believe that they are going to do the merger in Q2 of this year. So then let's take a look at the pro forma valuation of this company of Volta. As we can see in the investor presentation, we can see a post-money equity value of a little bit more than $2 billion. So this is the pro forma market cap of Volta after the merger, based on a share price of $10 per share, because that's where they started out with, just like almost all the other SPACs out there. So that means that, well, they don't provide the numbers exactly, but as we can see, the pro forma market cap is going to be 2.031 billion. So that means that they are going to have 203.1 million shares outstanding after the merger. So that indeed means that the market cap is a little bit over 2 billion. But we also need to take into account that they are going to have quite a lot of cash on their balance sheet, 662 million. And also a little bit of debt on their balance sheet as well, 52 million. So that means that their net cash position, basically 662 minus 52, is $610 million in net cash on their balance sheet. So if we then take that market cap of 2 billion and we subtract the amount of net cash, 600 million, then we're going to arrive at an enterprise value of 1.4 billion. So that means that Volta, based on a share price of $10 per share, is actually worth $1.4 billion. The thing, however, is if we go into TradingView, we can see that the current price per share is $15.35. So let's actually put that in our Excel sheet over here, $15.35. So that means that the current pro forma market cap, based on this new share price, has gone up to $3.1 billion. And then if you take off the amount of net cash again, you're going to arrive at an enterprise value of $2.5 billion. So again, based on a share price of $15.35, then that would mean that Volta right now is worth $2.5 billion. But we don't want to know the pro forma valuation, we want to know the fair valuation. Well, in order to get to that fair valuation, we first need to go to the future enterprise valuation. One of the methods to calculate the future enterprise valuation is to take the EBITDA of a company in the future, right? And we're going to apply a certain multiple to that to arrive at an enterprise value. So we need two numbers for this. First of all, we need the EBITDA of a certain year, and we need a certain EBITDA multiple. Let's first take a look at that EBITDA of the future. So here we can see that they start out with $47 million in revenue in 2021. They expect that they're going to scale that up all the way to $826 million in 2025. And then if you look at their EBITDA, it starts out at a loss of 30 million, but in 2025 they expect to have a positive EBITDA of $252 million. So if you take that number and we put it in our Excel sheet, or sorry, in our calculator, then we're going to start our calculations with that number, 252 million. So now the next thing that we're going to need is an EV multiple, or sorry, an EBITDA multiple. And for that, they compare themselves with other similar companies out there, companies like ChargePoint, EVbox, but also companies like Enphase, SolarEdge, Array, Tesla as well. Not sure if that's a very fair comparable, I would say, but whatever. So they try to compare themselves with companies like ChargePoint, EVbox, and Blink most of all. And they see that, well, EVbox, Blink, they don't really have numbers for 2025, so it's going to be a little bit difficult. But they see that ChargePoint, for example, is trading at a multiple of 80.5x if you look at their 2025 numbers, right? So, okay, 80.5x, that could be an interesting multiple to work with. But they also see that these companies, so Enphase, SolarEdge, Array, are trading at, in general, lower multiples, especially Array and SolarEdge are just having lower multiples compared to Enphase, Tesla, but also compared to ChargePoint as well. Okay, so the SPAC and the company and Volta have looked at these multiples and say, well, you know what, these multiples seem a little bit high for us. What we are going to do is we're going to take a slightly lower range of multiples. We are going to give ourselves a range of multiples of 25x on the low end and 35x on the high end, which, well, compared to especially ChargePoint, for example, is still on the low end still, right? But okay, we are going to also work with these multiples. So 25x on the low end, 35x on the high end. So now we have all our numbers. Now we just need to do the calculations. So first of all, we said, okay, in 2025, they're going to have an EBITDA, or they expect to have an EBITDA, and of course, expect is an important word there, of $252 million. Let's first take that number and multiply it by our low EBITDA multiple of 25x. So if we do that, we arrive at an enterprise value of $6.3 billion. Okay, $6.3 billion. Now we can do exactly the same with the high multiple. So we go back to that EBITDA of 2025, and now we multiply it by 35, which is the high multiple that they decided to use for this calculation. And that is going to give you more or less $8.8 billion. And these numbers are also more or less in the investor presentation. There are slight differences, but that is just because of some rounding differences between my calculation and their calculation, right? And then we can also go ahead and take a look at the midpoint valuation. What does that mean? Well, we now have these two enterprise valuations, right? In the future, in 2025, 6.3 billion on the low end, 8.8 billion on the high end. Then the midpoint valuation is simply going to be the average of these two numbers, which in this case is going to be almost $7.6 billion. But again, keep in mind that this is the future enterprise valuation of 2025. We, of course, want to know the enterprise valuation of 2021, because that is the year that we are living in. So we're going to do something. We're going to take these numbers we've just been calculating, and we're going to apply a certain formula for that. First of all, we're going to go back to the investor presentation, because we're going to need additional two numbers. First of all, we need the amount of years. We need to discount it back from 2025 back to 2021, which is, of course, 4 years. So that is already one important number we're going to use. And we also need a so-called discount rate. Well, as we can see in the investor presentation, they use a discount rate of 20%, which is very normal for SPACs. Almost all the SPACs are using a discount rate of 20%. So now we can actually start doing some calculations. Let's put this a little bit more beautifully over here. And let's go back to our low valuation first. Let's start out with the low valuation. So first of all, we said, okay, the enterprise value on the low end in 2025 is going to be 6.3 billion. Okay. With our formula first, what we need to do is we need to divide this number by 1.2. The 2 here is standing for that discount rate of 20%. Okay. We also said, well, we need to do that 4 years back in time, from 2025 back to 2021. So we need to do this number, 1.2, to the power of 4. Well, if you do that calculation, you're going to end up with this number over here. So a little bit more than $3 billion, which is also calculated by my Excel sheet over here. And is also more or less the number, again, because of the rounding differences that is present here in the investor presentation. So now we can do exactly the same thing with our high multiple, our high valuation. We said the high valuation is going to be $8.82 billion in 2025. Let's apply exactly the same formula. So divided by 1.2 because of that discount rate of 20% to the power of 4 because 4 years back in time. That is going to give you a current fair enterprise valuation of $4.2 billion more or less, which is also in my Excel sheet and also more or less here in the investor presentation. Now again, we can see also here that we can calculate now a fair midpoint enterprise valuation. If you do that, if you take the average numbers between 3 billion and 4.2 billion, you're going to arrive at an enterprise value of almost $3.6 billion. Well, we're almost there. We just need to do a few more steps right now. So we have these enterprise values, but we need to arrive at a fair price per share. How do we do that? Well, first of all, in the beginning of this video, we said, well, if you take the market cap, subtract the amount of net cash, you're going to arrive at an enterprise value. We now need to do exactly the same thing, but vice versa. We have the enterprise value, we want to reach the market cap. So what you now need to do is take that enterprise valuation, add the amount of net cash you're going to have on their balance sheet, and then you're going to arrive at these fair market caps. So for the low end, 3.6 billion, for the midpoint valuation, 4.2 billion, for the high valuation, 4.8 billion. Now you can also say, well, in the beginning of this video, we also said that they're going to have 203.1 million shares outstanding after the merger. So now you can take these market caps, you can divide them by the amount of outstanding shares, and that is going to give you these prices per share. So these fair prices per share. And we can see that for the low end, it is going to be a fair price per share of $17.96. For the midpoint valuation, it's $20.95. And for the high valuation, $23.95. Okay, so a fair midpoint price per share would be $20.95, which would mean that currently Volta, which is trading under the ticker symbol SNPR, is actually undervalued. Now again, don't forget, don't trust me, verify me. Always check what I'm doing. I could be completely wrong, so always see if this is actually correct. And also keep in mind that we have been taking a look at assumptions. We've taken a look at predicted revenues, predicted EBITDA. We've applied a certain EBITDA multiple. Maybe you want a higher one, maybe you want a lower one. But if you change one of those numbers, the entire calculation is going to change and your fair price per share is going to change as well. I'd like to thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.